Welcome to the New York live trading session. I hope um, you you are ready with questions. Even though I won't be able to hear you guys. Um, sorry, I won't be able to hear you guys, but yeah, you can type your questions and the pairs that you'd like us to analyze. I have a couple of pairs for us to look at, of course, the usual. But we have a lesson today on imbalance, so we're going to start with that before we can go more into details with market analysis, etc. So in front of us is Black Bull Markets. I hope you can see that. I've been sharing the link. It's available on Telegram. Have a look at them. Very good broker, international broker. It's more institutional. Um, I'll show you why. 70 plus markets that you can trade on forex, commodities, equities. They have very fast executions. Here's my favorite part is that they are available on all these trading platforms: TradingView, MetaTrader, 4 and 5, CTrader, Black Bull Copy Trader. If you want to copy someone, let's look at the types of account. We have ECN account, my favorite, 0.8 on the spreads, zero commissions, minimum deposits being, let me say $1. So you can deposit as little as $1 all the way up. Well, for those that have to join our bootcamp, they have to deposit $100 upwards. Bootcamp will be starting tomorrow evening. Kutala has been asking about that. So I had to make sure that I alert everyone who had shown interest and announce it to the group. I'm going to announce it to the group just after this session. Yeah. We also have ECN Prime 0.1 on the spreads. Commissions is $6. And then minimum deposit is $2,000. So these are more for institutional traders. As you can see on the ECN institutional, the minimum deposit is $20,000. So open a standard account, fund with $100 upwards, and you can read more about this. Leverage is up to 1:500. About over 26,000 instruments that you can trade, and very fast executions. Let us look at the Forex Factory calendar to see what kind of news events are due to be released today. 4:45, which is about an hour from now. We want to have more news on the US presidential election, a very big day. I don't trade coincidentally. I don't trade the first week of the month. I won't trade this week, but I do have some setups that are looking nice. One would ask, why am I sharing setups with you that I'm not going to trade? You might find that it will work for you. So for me, I would rather miss out on setups in respect of the rules that I have on my trading plan than to take trades that will get me into losses and then I regret it. I would rather not lose all that I have, even if it takes a long time for me to get to make 150 million. The most important thing, I know that's the final goal, but the most important thing is to keep what I have, so that when the time comes, or when the opportunities are of high probability, I can act on them. Earlier on, we had news on the cash rate, which is interest rates from the Reserve Bank of Australia. It didn't change. It was kept the same. As you can see, the previous value was 4.35%. The forecast was 4.35%, and accurately so, the actual value was 4.35%. Later on, 11:45, we're going to see unemployment change. This is, I would say, NFP of New Zealand. As you can see, previous value was 0.4. It's expected to go to negative 0.4%. As far as the employment rate is expected to drop. To drop by 0.4% from 4.6%. 100%. Now, this is just gibberish if you do not understand the economics. The question is, even if you understand the economics, how do you then time the markets? Um, with what's going to happen today, especially on the presidential elections, when it comes to whether you need to buy or sell the dollar, I think it's guesswork at this point. Investors are going to respond differently. Hence, I'm going to wait the week out, wait for the market to fully digest all the information because we also have congressional elections coming through. And probably before the end of the month, there is interest rates news coming up. So the market has to decipher or digest all that information before we can decide to take a direction. So as usual, we're going to go through our analysis, starting with the dollar index. Before that, the mini lesson that I was talking about, um, it's based on this question. I think if I can have these questions here, I think we'll understand this. Yeah. What is the market's main objective? Yeah, just these two questions. Just these two questions. I think we're gonna be trying to answer that. Oh, sorry. I think it should be that question. Just give me a moment. I can see there's a question in the chat box. Okay. Going to go for that. Scap this. Where does opportunities lie? That would be the second question. And yeah, finally, there we go. I'm gonna be trying to answer these three questions. Ah, fantastic, Kutala. Kutala says to match a buyer and a seller, traders make money when there's an imbalance in the markets. I think that's all you need to know. Thank you, Kutala, for that. I think that's all you need to know. So three questions. What's the market's main objective? As Kutala have said, it is balance. It is basically balance. I'm gonna put it differently though. It's balance. In this sense. That's all you need to know. So this is um economics 101. So the main objective of the market is balance, so that a buyer can meet a seller, or can say supply is equals to demand. And next question is, where does the opportunities lie in the market? Opportunities really lie. Okay, let me do this first. So this is my ugly chart. So we've got this region. We've got A over there. Got B. Got C. D. Okay. Something is happening here. Give me a moment. It's just a mini lesson. See. Right. Welcome to Mlamoli. It's been a while. Welcome, Mlamoli.
Maxwell, you don't have sound, Maxwell. There's no sound, Maxwell. Ma? Amaphilisi. Yo.
Apologies on that. Apologies on that. I just realized now. I just realized now that you guys cannot hear me. Sorry about that. Let me go back a bit. There we go. So today's lesson, once again, today's lesson is on imbalance. We answered the first question. What is the main objective of the market? It is for balance so that a buyer meets a seller, right? And how do we see when the market is balanced in the market? It is through A, right? Which means there's a fair exchange. The reason that people are trading at this price for a longer time, remember the x-axis represents time. People are trading here for a very long time compared to this imbalance. It means this is a fair market. This is where the price is okay for everyone. But that's not what you're looking for as a trader. As a trader, to make money, you want to find a market that is out of balance. For instance, at this area at C, here, sorry, demand is greater than supply. Quick question. What happens when you have two iPhones and there's 1,000 people who want who want those iPhones? So you have two iPhones, which means the supply is two, and the demand, people who want to buy it, is 100. What do you think will happen to the price? What do you think will happen to that price? Exactly. Price will increase. That is how we buy and sell everything else in life. It's not different from how we trade the markets, right? The price will increase, but then the question becomes where. That's where market timing comes in. So we have to know where to buy, right? Always buy at a cheaper price. Just like you wouldn't walk into a dealership for a car that's worth 500,000 rands and say, no, I'm willing to pay 650,000 rands. Sometimes try to negotiate the price down from 500,000 to maybe 450, 480. Because anyone who buys anything wants to buy at a cheaper price. Okay. I wanted to talk about that lesson. So let's look at imbalances in the markets. I think we haven't answered the last question, if I'm not mistaken. Last question is, how do traders make money? Traders make money by through what we call risk reward ratio. So just like this area, a trader would want to buy when price gets here, stop losses below the region, and I don't like using the word hope, and wait for price to go all the way up there. So how do traders make money? It is through what we call profit margin. So from 106, 300 to 107, 184. So that is your profit margin multiplied by your position size. That's how a trader makes money. So you need to see a clear imbalance. Also, the market pushing aggressively to the upside like this will give you a clear area to put your targets next time. Nice trade, 1:8, right? So let's look at the markets with the understanding. So there's the understanding of imbalances. Let me use a daily chart. I think we'll see this clear. Let me say 4 hour. Perfect. As much as it's going up, this is a balanced market. There's no clear imbalance here. And this is an imbalanced market. This right here. That's an imbalanced market. It means somewhere below the imbalance, there's an opportunity. So that is how we anticipate trades. And where is fair value? This is a balanced market. So do not buy or sell within this area. One would say, look at this push down, this imbalance. Yes, it might work for you in the short term, but you'd be selling in a market that is completely going up in the long term, if I can put it that way. Okay. I hope this makes sense. So we have the dollar index. Took a long time explaining or on today's lessons. The dollar index, it's a election night, US elections. I know a lot of you guys probably are excited you want to trade US elections, but I'll tell you this, it's very dangerous. It is very dangerous because like I said, the market is not just looking at Trump winning, they're looking at his policies, they're looking in the past, policies that he has passed in the past, they're looking at the economy during his tenure, how was it performing. If it was performing well, they'll be hopeful, probably they would buy the dollar. But if they are more dovish or more negative on Trump coming into office or Kamala um, Harris winning the elections, it's gonna have. I mean, what I'm trying to say is there's gonna be a lot of variables that you cannot control. Even if you are an economist, we have economists in our sessions, and yeah, it's still hard for them to tell where the market is going. So just give it time, give the market time to decipher this information, and then it'll tell you where it's going. Just like I'm doing. I'm not trading this week. Coincidentally, it is because my edge, according to studying my or reviewing my journal, I do not make money on the first week of the month. I do not make money on Monday. I don't make money on Friday. Hence, my focus is on the days where I make money. How I wish you guys could trade like that. You begin to trade without fear. You're more confident. But the hard part, it is on weeks like today when you have very nice setups, crisp setups that look very nice, and you want to get involved to those setups, but you can't because now you have these rules to respect. And it's not just rules that you made up of thin air. These are rules that support your edge. These are rules that says you are a winner on these days and you're a loser on the other days. So that is what has helped me improve in trading. So dollar index, it is bearish on a monthly, bearish on a weekly, bearish on a daily. So it seems like we need to be looking for selling opportunities. It looks like we need to be looking for selling opportunities. Look at that imbalance, what we just talked about from this candle to that one. So that should tell you that there is an opportunity pending for us here. And we mark the last buying candle before the drop as our area of supply, shaded. So what we anticipate right now is for the dollar to go back up there. But there's an area that we've been looking at for a while, which is this one right here, 103. We've been talking about 103, 350 for a very long time. So with that said, there is also a potential that the dollar index can touch 103 before it pushes all the way up. So once again, it's elections night. The market could go either way. When do you act? Market timing. If you want to buy anything that has the dollar, you need to buy when the dollar gets here. If you want to sell anything that has the dollar in it, sell it when the dollar gets to a level of supply, because you'll be in line. The correlation or the interrelationship will work in that regard. Let's look at gold. Expensive, shiny metal. Now I'm trying to rush through this because very soon we're going to be running out of time. Perfect. We have gold, which is bearish on a monthly. The month of November, we just started. It's bearish on gold. Remember, we're at all-time highs. We broke $2,800 dollars per ounce on gold. Unfortunately, we're bullish on a weekly, but I'd like to follow highest time frame, which is the monthly. Otherwise, an ideal situation for us, it is the daily, weekly, and monthly time frame telling us the same direction or the same thing. See, with the lesson that we've learned today, you can already tell that there's an imbalance here. And right here, the market is more balanced because this is consolidation, these three candlesticks. Okay, so we need to look above that. Let's step down to lower time frames. Oh, how easy this thing becomes once you have let me say a set of rules. Have a set of rules to follow. Sorry, wanted to say 4-hour time frame. Let's check the 4-hour time frame. Even though the consolidation or the market took a long time at this area, but I would say an ideal area of supply to sell from is that. So that's the imbalance that we're talking about. And this is the market. The market is always happy to see this, but this doesn't work for you. Remember when I say this works for a restaurant owner, let's say this chart represents the price of milk, right? For the restaurant owner, for the price to be at the same level. Right. Sorry, let me go back to sharing my screen. All right. So yeah, we have an imbalance there, and our supply level should be the one above. You see, even if you're using SMC, right? I don't want to take too much time on SMC stuff, but this is a break of structure to the upside, and you can find somewhere here what we call somewhere here change of character, and the order block that caused change of character was here, if you understand order blocks. So there's two ways this could go. I'm anticipating it to push up here and then maybe further down. But I would say in line with the dollar, I would like to see it coming back to a potential demand level. Let me just check the weekly for a second. Yeah, somewhere here, even though we have imbalance below that, somewhere there would be ideal. Let's check for our time frame now. I would look for areas lower, so somewhere here. Personally, there's an area 2,500. I've been waiting for gold to come back to 2,500, which is way below this. 2,500 is somewhere down here. Yes, I've been waiting for gold to come back there, but that would mean the tensions in the Middle East are not as violent as they are. What 3 minutes chart? I never look at a 3 minutes chart. This is a mistake. So yep, this is exactly what I'd anticipate. Look at that fair value, sell above that. Okay, what else do we have on? Yeah, let's look at US oil. This trade, we've been looking at it. We analyzed it together, took it together. The market is really responding very well to it. So look at that imbalance before the drawings pop up. Look at that imbalance. So we anticipated the market to come to that, and as you can see, so far we are running at a 1:3 in profit. Original target is a 1:6. So we were able to anticipate this ahead of time. I'm gonna show you a before screenshot of that.